Again, everybody. Dwayne here from DRFX Forex Trading. Aussie US dollar. The overall scenario of this pair on the daily chart is that we have finally headed towards this and hit this major outer uptrend line following the break of this inner uptrend line in 2012. So right now we're in a situation in which we could either see the pair break below this trend line to continue the momentum in favor of the US dollar, or we could see the market rally at this area here and head towards this outer downtrend line. So taking a closer look at what's the situation in terms of the setup that could lead to a movement in either direction. Here you see the pennant setup that was formed at this downtrend line. The resistance was formed at the 0.7378 area with the corresponding support points formed with at the 70.18 and 71.13 areas. So a pennant consolidation formation right at the crossroads of this outer uptrend line as well as this downtrend line. So right now we're actually above this downtrend line, so we could actually see the market rally, breaking this resistance boundary and start a movement that takes us towards this outer downtrend line. Or we could actually see the market U-turn at this area here once it reaches the resistance area once again and head towards the support boundary and then break it, breaking the outer uptrend line in as well. So those are the two possibilities in terms of where we could see this pair head towards in the early part of 2016. Possible bullish breakout above the resistance, or U-turn at support, or break of support and the outer uptrend line to start the breakout in favor of the US dollar. Now, in terms of today I'm going to look at the possibility of the breakout above the resistance that could take us towards this outer downtrend line. Now, in terms of our trade setup, take advantage of that movement. There are certain steps that we need to take when it comes to trading consolidation breakouts. We have to first analyze the market, analyze the chart to determine if the consolidation setup is strong enough and clear enough. Once that is done, then we can move on to the other elements of the analysis to determine if we can trade it and how to trade it. Now, when it comes to consolidation breakouts, there are times when the market will provide us with a good signal, and once the candle is strong enough above the boundary, we can trade it. However, there are times, depending on the type of consolidation that we're trading, where it is better to wait for the market to provide us with another setup followed by a signal to trade the breakout instead of a single candle. So what that means is that sometimes when the market will hit the resistance boundary, it will move sideways and create a small consolidation setup or a small counter trend line setup followed by a breakout signal. But there are times when the market just needs a single candle to start the breakout and provide us with a successful breakout and a successful trade. So what we see here is going to determine whether or not we can trade it, and we'll have to analyze the market in terms of what we see here to determine whether or not we can trade it. And that is going to be done using this chart analysis trade sheet. And this essentially provides us with all the elements that we need to use to analyze the market, analyze the pair, analyze the consolidation, and analyze the signals that are given. These set of criteria are going to help us to determine which signals to trade and which signals to avoid. So once we get a signal that is in sync with that trade sheet, then we can take advantage of that breakout as we head higher in favor of the Aussie dollar. Now, with respect to consolidation breakouts, there are essentially three main aspects of these types of trades that we need to take into consideration before we trade. The first, as I mentioned, was the setup and the signal that lead to the start the breakout. The next element has to do with the breakout target. Breakouts are very profitable and they tend to move very quickly, but one of the problems that we have with trading consolidations is determining where the market is gonna, how far the breakout is gonna move, and how many pips we can get from this trade. So once we're able to determine where the target is gonna be for this trade, then we can trade with more confidence towards that target, without the fear of unexpected reversals. And the third aspect is that we need to ensure that we place our stop loss at the strongest area, so that we can ride out the trade until we hit that profit target. Now that third element, which is the stop loss, is also going to be solved by using this trade sheet, and you're going to be using it in terms of looking at the setup on the daily chart as well as a 4-hour chart. So we're going to be using those time frames to determine where our stop loss can be to take advantage of that breakout. So to summarize, with respect to consolidation breakouts, we have to determine and ensure that the overall setup is strong and clear enough. We then have to determine whether or not the signal is strong enough to justify the considering it as a trading possibility. And once that is done, then we need to determine where the target is going to be, so that we can trade with more confidence towards that target. And in trading towards that target, we need to ensure that our stop loss is placed at a very strong area, either on the daily chart or the 4-hour chart, so that we can be confident in the knowledge that our trade is going to be protected throughout the duration of the trade. So these are going to be the main elements used in conjunction with this trade sheet that is going to help us in taking advantage of consolidation breakouts such as this. So once that is done, then most of these consolidation breakouts can be maximized and taken advantage of with greater consistency and greater confidence.